Hello traders, good afternoon. My name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report with Alpari, where I will tell you what's going on the markets. And overnight we had really interesting movements. So many things changed yesterday, and today a situation on many instruments is much different than it was before. As always, let me show you the calendar. Today, maybe not the most important day in the history, but we got PMIs. PMIs came mixed from Germany, slightly better, from Eurozone, slightly worse. But in general, like very close to the consensus. No big misses, no big beats of the number. And still to come in 2.5 hours, ECB monetary policy meeting accounts and PMIs from US. Friday we'll finish with the GDP from Germany and with the speech from Jerome Powell and durable good orders, also important for the American dollar. And let me show you the charts because that is where the situation is the most interesting. So on Euro to Australian dollar, that was a false breakout from this horizontal, from this rectangle. The price bounced from the combination of two Fibonacci lines. 38.2 of this downtrend and 3.6 from this uptrend. That was a strong support. There are virtually no chances for this head and shoulder pattern, and those traders who got caught in this are now escaping fast. And look at this strong upswing, beautiful one, 250 pips just in a few days, in 4 days. That is a really good buy signal. It was here, and now the sentiment is back to the positive. In the short term we can have a small reversal, but eventually we should see a further upswing. Swiss franc to Japanese yen also, we had a sell signal here. After the cancellation of the sell signal at the beginning of the week, we have a strong upswing, which is characteristical to the situation where most of the traders were betting on one side and it failed. So now they are escaping fast. That is why the movement is so strong. Because really, it's maybe not the first time I see this, but after a candle like that and a candle like that on a daily chart, this is not supposed to happen, but it did, and now we are having a strong upswing after this. The price is on a super important horizontal resistance. Price closing a day above this resistance will be a strong buy signal. Buy signal will be in line with this false breakout. This can be considered as a false breakout, and breakout of the orange area will cancel a sell signal from the weekly chart. So it denies this candle, it will deny those two shooting stars as well. So price closing a week above the green, above the red area is a super strong buy signal. Now Australian dollar to Japanese yen. So after this inverse head and shoulder formation, we had a buy signal and a flag and a buy signal again, but then the price went down, and actually all this upswing can be considered as a flag formation. Those orange lines, flag is a trend continuation pattern, trend was bearish. The thing is that we are still above the green line here, and as long as we stay above the green line, the sentiment is still positive. Price closing a day below the green line will be an invitation to go short. As you can see, this green line is still respected today with a great accuracy here, and as long as we stay above this, there is still a possibility for a further upswing, but price breaking this will be an invitation to go short. Like that, to be precise. Now gold. So gold failed to reach the 23.6 Fibonacci, and they bounced from the first resistance on their way, and the first resistance on their way was the midterm downtrend line, which connects the lower low since the middle of June. So after a V-shaped reversal, we have a first stop. Breakout of the orange line will lead us to the 23.6, but in overall the sentiment is not so good. As you can see, we have a doji, upswing doji, and most probably a downswing. Then we can think about something, but well guys, there is not much to add here, as we bounce from the midterm downtrend line. So bounce from the midterm downtrend line keeps the downtrend line alive. You cannot get beyond that. That's just a basic principle of the price action. So as long as the price stays below the orange area, the sentiment is still negative. Oil, very interesting situation is on oil, because as you can see, since the end of June the price is in the uptrend, and the price created a triple top formation, first, second, third. At the end of the previous week, the price broke the neckline of this formation here, and also the horizontal support marked with a green color here, upper green color, or a green color. This one I will change for, let's say, gray. Price broke this, and that created us a sell signal, and throughout the end of the last week and the beginning of this week, the price was in a correction mode. It happens very often that broken support is tested as a resistance, so it was tested 2 days ago, and that was a positive test for the sellers. But yesterday the price advanced higher and broke this resistance, and that brought us a positive sentiment. As you can see, all those traders that bet for short positions here, their stop loss was here, and this stop that's a typical movement for the stop loss activation. Also the surge helped to break the midterm downtrend line here, which connects the lower highs since the beginning of July. So that upswing, actually that comeback above here cancels sell signal, but that breakout of this black line triggers a buy signal on oil. So the buy signal on oil is present as long as we stay above the green area. So that is the situation on oil, and it's positive. It's positive. The price should continue to go up. Very interesting situation on Bitcoin. Let me start from the very beginning. So Bitcoin most recently met the ultimate support and super important level for the midterm situation on this altcoin, on this cryptocurrency, $5,800, around $5,800. As you can see, it was a support. It's an important support since November 2017. So most recently the price tested that here, almost here, here, and here the price created inverse head and shoulder formation. The price went higher. Now we had another test of this support and another test with an inverse head and shoulder formation, left shoulder, head and a right shoulder. Then the price broke the neckline, and it was yesterday, but buyers could not, typical pullback, comeback, even we had a hammer here, but the price, buyers could not hold above this orange area, and the price went lower. So that Maybe let me change the color here. That is a false breakout. False breakouts usually lead to the movement, to the strong movement in the opposite direction. Like here, that's a false breakout, movement in the opposite direction. Here, that's a false breakout, strong movement in the opposite direction. Oil, false breakout below the support, strong movement in the opposite direction. So I don't see how it is not different here. It is. Upswing, it's not. Upswing, false breakout, strong movement in the opposite direction. Thing is that additionally price is breaking the line connecting the bottom of the head and the bottom of the right shoulder here. Inverse shoulder formation, left shoulder, head and right shoulder. If we connect those lows, false breakout, that's a breakout, and the price is staying below this line. With this false breakout marked with a yellow color, in my opinion, we should see the test of the green area soon. That is my outlook on this instrument. In the meantime, we have a midterm horizontal support here on 6,300, $200. A breakout of the yellow area will open as a way towards the ultimate support for the Bitcoin on $5,800. That will be another support, and most probably on the green area will have a bounce because many people buy this when the price is there. But look at the daily chart. The daily chart is the daily candle is very, very bad here. That's a shooting star. So in my opinion, the test of the green area is almost certain. We will see what will happen, but from the technical point of view, I really would not be surprised if I would see the price there. To be honest with you, I would be rather surprised if I didn't see, if I did not see the price there in the nearest future. Let's check another instrument, which is Australian dollar, no, American dollar, which is drawing a very negative candle on the daily chart, on the weekly chart. That's a shooting star. But let me start from the very beginning, from H4. So most recently we had this symmetric triangle pattern. The price bounced from the upper line of the triangle pattern, from the downtrend lines here, and went lower. The price went lower here and reversed. Then the price came back above the horizontal resistance, this green area, and tested the lower line of the symmetric triangle as a resistance. Test was positive for the sellers and the price went down. Price still being below the green area is the perfect indicator for the sell signal. So as long as we stay below the green area, there is still a sell signal, and pretty strong one. Now British pound to American dollar. Well, American dollar is gaining traction at the end of the week. So we had a positive sentiment because this flag did not work out for the sellers and the price went higher. But as you can see, buyers are not trying to test the horizontal resistance here, which is showing a bit their weakness. Because that would be nice to see the test of this line and the midterm downtrend line and then a reversal, but the buyers are giving up now without testing this midterm downtrend line. That would be really good to see the bounce here. American dollar to Swiss franc. Swiss franc is one of the strongest currencies recently. So I was thinking about the price breaking the upper line here, but the price instead broke the lower line of the triangle and the horizontal support here. So I don't think that the breakout of the upper line here is still on the table. I don't think so. Probably we should get ready for a further downswing. The sell signal will be triggered once the new fresh sell signal will be triggered once the price will break the yellow area, which for now looks like it's gonna happen. It's more likely to happen than the breakout of the upper green line. Euro dollar is back above the neckline, we all know that, and as expected yesterday we are extending the bearish correction here. We tested this line here at the very beginning of the European session. Now it's time for another test of this line as a support. Price bouncing from the violet area will be a strong buy signal for the euro dollar, also in line with what we are saying here, so a false breakout. Once this false breakout will be established, well, it is, because the price is above the resistance. So there is a proper buy signal on the euro dollar, but if you don't feel it yet, wait for another test of the violet area. Once the price will reverse, that will be a great invitation to go long on euro to American dollar. New Zealand dollar to American dollar, that's what we are telling you about the great selling opportunity. So yesterday the price met a combination of two important resistances. So first one was the horizontal resistance here created by those lows, and the next one was the correction equality pattern here. So this correction was the same as this one. The price tested that area and went lower. Boom. In the meantime, well, I seldom go to this lower time frames, but what price created was a short-term symmetric triangle, which is called pennant. This resulted with the breakout of the lower line instead of the upper line, so that is a sell signal on New Zealand dollar to American dollar. Australian dollar to Canadian dollar, we were telling you yesterday that the price is trying to break super important horizontal resistance, and yesterday's candle was showing us a failure of this, a rejection of this resistance, and today we just see the continuation of this movement. So that was the rejection yesterday, and today we just using this for a further drop, and that is a very negative situation here. So the price should continue to go down on Australian dollar to Canadian dollar, which is actually in line with the long-term trend, because we broke the uptrend line. Depending how will you draw this line, we are below those two, so we should see a continuation of the drop, and the first horizontal support is here. In terms of the risk to reward ratio, if you sold here 120 pips stop loss, 320 pips take profit, that is a good risk to reward ratio. That's a good trading occasion. New Zealand dollar to Canadian dollar is still trying to protect the combination of those two important supports, so long-term downtrend line and a neckline of the inverted shoulder formation. But the thing is that daily chart is not giving many hopes. That's a shooting star. Shooting star should result with a further drop. It can be seen that the selling pressure is high here. Traders do not really have idea how to defend this level. Mid-term uptrend line is broken. So even despite the fact that we are above the combination of those two, well, we were above the neckline, now we broke the neckline. We are just above the long-term downtrend line. but it's not enough. I think that the sell signal is already here. So New Zealand dollar to Canadian dollar, that should go down, which shows you actually the strength of the Canadian dollar, right? It can be seen here and here. The Canadian dollar is very strong, even despite the recent situation with Saudi Arabia, where they said that they are selling all the assets in Canadian dollar. British pound to New Zealand dollar, here symmetric triangle, still waiting for the breakout. As you can see, in the last few days we didn't even move. Like the volatility is 100 pips, which for this pair is really low. Silver, as we said yesterday, that this wedge promotes a further drop, so we broke the lower line of the wedge and the price went lower. Well, buyers can pray for the double bottom formation or something, but it will be really hard to draw something like that. The situation on silver is negative. And American dollar to Japanese yen, inverse can show the formation, beautiful. Breakout of the neckline, test as a neckline as a support, breakout of the midterm downtrend line. That's a comeback to the positive sentiment on American dollar to Japanese yen. Let's check the latest, the last resistance here. So the midterm downtrend line, which is being attacked as we speak. Altogether, that will be an upswing, a wedge, and most possibly an upswing to claim the bullish victory. We need to see the daily candlestick closing above those resistances, so upper line of the flag and this long-term downtrend line. So as you can see, we're absolutely on a crucial areas. Obviously, American dollar to Japanese yen tested 38.2. That can be an interesting buying opportunity for the next week. There is another resistance here. So in my opinion, the buy signal, there is this horizontal resistance here. The buy signal will be created only when the price will break the yellow area. But that's potentially a very good trading occasion. So let me recap the situation for you. Euro to Australian dollar, short-term sell, long-term buy. Swiss franc to Japanese yen. Hard to tell because the price is touching super important resistance, but price closing a day above the red area, super strong buy. Australian dollar to Japanese yen, that is rather sell. Gold, that is rather sell. Oil buy. Bitcoin sell. Australian dollar, American dollar sell. British pound, cable sell. American dollar to Swiss franc, no signal. Euro dollar, as long as we are above the violet area, that is buy. But let me draw another support here. As long as we stay above the green area, that is buy. New Zealand dollar, American dollar sell. Australian dollar, Canadian dollar sell. New Zealand dollar, Canadian dollar sell. British pound to New Zealand dollar, no trading signal. Silver sell. American dollar to Japanese yen, potentially a super strong buy, but once the price will break the yellow area. So that's it, guys, for today. Thanks very much for watching our trading sniper. I hope you enjoyed that. When trading, remember that trading and investment in financial markets involves an element of risk. Never forget that. Now we'll have a short break, and after that we'll have a webinar about the technical analysis. I hope you will all attend this webinar. In the meantime, visit our Twitter account and our website allpray.news and our YouTube channel and our Facebook page, because we have a lot of great analytical content over there and you don't want to miss it, really. I'm super honest with you. And thanks very much for today and see you soon.